stocks show mild recovery with mid-caps outperforming, realty, healthcare, energy lead gains, while consumer durables and IT drag.
The festive October spelled good tidings for car and two-wheeler makers with strong sales, though mostly in line with expectations. The big outperformance was seen in commercial vehicles and tractors.
Aditya Birla Group Chairman Kumar Mangalam Birla says that the aim is to be one or two across businesses. He is banking on thorough preparations and precise execution to achieve this as he completes 30 years at the helm.
SBI Chairman C.S. Shetty tells CNBC-TV18 there will be consolidation in the banking space, adding that it has definitely helped public sector banks. He also believes that scale is important for banks to leverage technology.
Hello, good afternoon. You're tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well. Mangalam, good afternoon, and beginning of the month, beginning of the week started a bit muted, but then we did see a recovery coming in. And right now, Nifty is 25,700, around and above that level is what the Nifty is continuing to trade at today. Now, obviously, in terms of sectors today, let's look at that, right? Which sectors are managing to hold on to good gains? We have realty that's doing well. PSU banks, that's also managing to hold on to very strong gains of 1.7%. So keep an eye out on that one. We have Bank of Baroda, Indian Bank, Canara Bank, which are seeing gains of more than around 2% in today's trading session. Nifty Pharma today too is managing to hold on to gains. And a lot of movers today, what we're seeing coming in is maybe for the broader end of the market, and in terms of earnings also, that we're seeing a bit of a move coming in there. So let's keep an eye out on that. Mid-cap also is managing to hold on to good gains of 3/10 to 4/10%. Small cap seeing better performance, 7/10% of gain coming in there as well. Mangalam, so an interesting day. Broader end of the market surely doing better.
Yep, the broader markets are doing extremely well, even as the frontline indices consolidate. We do have a couple of these cash market stocks seeing a lot of volume. So Dredging Corp, for instance, is up, locked in 20% upper circuit with a fair amount of volumes backing it. TD Power for second day running, doing extremely well. And we have Rajratan Wire as well. Management had upped their guidance. They spoke to CNBC-TV18 here on Friday afternoon. And from there on itself, there has been a purchase on that counter. MAS Financial doing extremely well. And then from the F&O pack, we have HFCL, which too is doing fairly well. But let's go across to the management of United Breweries. The company reported their numbers was slightly soft. In fact, we did see some weakness in, the volume and the margins as well. So let's go across to the management. Vivek Gupta, the MD CEO, now joins in. Thanks a lot, Mr. Gupta, for joining in. If you could give us a detailed breakdown of the quarter that was, because there were a fair amount of disruptions. On the one hand, there was higher than expected monsoons. Then there were some state-related tailwinds and headwinds. You got a price hike in Telangana. And at the same time, your own premium push. So if you could break down how the quarter went by before telling us about the quarters ahead.
I would say that, the quarter was, if I split it into three parts, 1/3 of our business actually grew more than 15%. There are states like Andhra, Assam, Jharkhand. We saw a significant growth. So 1/3 of our business where there was less monsoon impact, good positive excise policy. Maharashtra is one of the examples. We continue to see more than 15% of the growth. 1/3 of the business got impacted by rain, specifically in the north. So Punjab and Haryana, in few months, the category was actually down 40% because 3 of our breweries were also flooded. And then I would say 25 to 30% of the business got really impacted by affordability. So states like West Bengal, Orissa, Karnataka, the beer has become so expensive, and I've been consistently repeating that affordability is the biggest challenge on the category. And we are now seeing that consumers are either switching to IMFL or consuming less beer in these states. So going forward, of course, we hope that weather is more graceful to us, though I hear that coming winters are going to be even stronger because of La Nina impact in north, and we will see that. But structurally, I feel very positive about the momentum we are seeing in the first 35-40% of our business, like Maharashtra, Assam, Northeast, in these states. And then on where the weather had an impact, we should see some recovery. On the other states, we continuously work with the regulators to provide them data information because in states like Karnataka, their excise revenue is getting hurt because of the beer becoming so expensive. So we hope that we will be able to get some positive recommendations and actions from the regulators in the coming months. But that is why the business is quite mixed right now.
All right, so 1/3 of the business grew over 15%, and the next 2/3 got impacted by the weather and regulatory challenges, respectively. But the third quarter, and because you alluded to La Nina, how are the next couple of quarters coming along? It's not stopped raining in November yet. So are beer sales picking up, or are they still stagnating?
If I have to be looking at the data and what I'm observing right now, even October, there were almost 12% more rainfall than average in the country to do that. And this time, both the big festivals, Dussehra and Diwali, has come early in October. And with the La Nina impact, predicted in North, I think the recovery to 5 to 6% volume growth in the category is probably a quarter away. However, we do feel that there is momentum on the business in the pockets of the country, and we hope that will yield a positive impact. We also know that our business, especially on premium, grew 17%, and in the first half, it has grown 33%. And we know it got impacted a lot because of logistics and rains. So we hope that momentum will continue as there is an underlying consumer demand. There is expected to be a positive impact of GST changes also on the consumer choices. So we hope with the coming festive season of especially New Year and celebrations, a lot of sports also happening. We hope the momentum will pick up, but I see the 5 to 6% growth is probably a quarter away.
5 to 6% growth is probably a quarter away, but let me ask you this straight. You're going into the third quarter with an 8% volume growth as a base. Given the weather and given the sort of challenges that you're facing, is there a risk that third quarter volumes will be negative, or you're short of positive volume growth in the third quarter?
See, we are only 1/3 into the quarter. We have just finished the October month. I'm quite positive we are going to, it will not be in a negative base unless some external situations happen which we don't predict. I expect the premium business to bounce back again and grow more than 30%. Our premium brand fundamentals are extremely strong. Last week, we actually got data on brand power, and our brands Ultra and Ultra Max hit one of the max, brand power score. So our brand fundamentals are very strong. We also made a strategic choice in September and August, despite weather, to continue our investments. If you see, our brand investments actually went up by 22%. Our coolers are now in 37,000 stores, which used to be in 15,000 stores. So we are actually investing in brand fundamentals. We are investing in service to the customers. Our portfolio is extremely strong. Heineken Silver is growing 34%. So I definitely expect a very strong recovery on premium, because our goal is to grow 30% quarter on quarter on premium. So we will have a very strong quarter on premium. How much weather impacts happen, it is anyone's guess right now because it's so unpredictable. But our fundamentals, we hope, are going to be much stronger. And at the same time, we're also doing some work on productivity and cost efficiencies as well to variabilize some of our fixed cost, so that we can also absorb some of these shocks better going forward.
Interesting there, Mr. Gupta. But, obviously, what is it going to be in terms of bottle returns as well? Volumes, you're not worried that you'll see a negative impact in Q3, but bottle returns in Q2, what was that? And what is the target now that you're keeping an eye out on?
We are gradually seeing the progress on bottle returns. Our bottle returns, even in the last quarter, are better, despite our gross margins being lower, are better versus the previous quarter. So we have made operational discipline, we have made structural investments there, and that are working. And we are also putting some specialist focus on the or district-wise focus in the country, because there are some districts where the bottle return is as low as single digit. So we are creating a good infrastructure there. So there's a lot of work happening on bottle returns. But as you mentioned, we continue to invest in new bottles in the premium. But the good news is, because of localization of premium, is now we are almost through in 80% of our portfolio. We are seeing a gross margin recovery on premium from this quarter onwards. So we always had a gap in the gross margins on premium versus mainstream because we are putting new bottles. It was not local production. So at least the local production part is almost done. And we will see a good pickup in our gross margins on premium going forward.
So then let's take that point forward itself. Vivek, what's your outlook on margins from here? There was a sharp decline in the second quarter, understandably because of the revenue decline as well. Do we see them going to double digits soon?
I think one is the raw material is getting predictable, but we know that recently government has announced the MSP increase on barley by 8%. We know the inflationary pressure on aluminium cans in particular, as cans are growing in the salience. So we expect, the commodities to be volatile, and we see the inflationary pressures coming. Now, at the same time, we will need to continue to do the cost initiatives. We need to take the pricing because we did get the pricing in Telangana. But as you remember, we didn't get the pricing what we were expecting to make the business to a green level. So we will have to continue to work with the state governments to get the right pricing, but at the same time to reduce taxation. Because increasing pricing, the every 1 rupee price increase they give to us is actually 4 rupees they charge to the consumer. So consumer, we need to make sure affordability doesn't get impacted. So it's a tough equation where we need to manage the cost, we need to manage our revenues. At the same time, we need to make sure the affordability doesn't become a big issue to consumer. So we are actually doing a lot of cost initiatives, productivity initiatives, leveraging our scale for better sourcing. At the same time, as I mentioned, our premium mix will continue to increase. That should help us with this stuff. And last but not the least, I think it's a highly capital intensive category, the beer category. So the volume is the king. So eventually, if volume recovery is going to help our margins and better utilization of our fixed cost, because this quarter, one of the reasons our gross margins got impacted because our own breweries in the states which got impacted either by affordability or rains had less capacity utilization. So eventually, if we utilize more capacities, our fixed costs get better utilized, and the margins, it improves the margins as well. So finally, we have to get back to growth and not lose the momentum, and that is our focus as a category maker.
Right, and just the last question from my side, your market share, because in Q1 you had mentioned that you had gained around 300 basis points, more than 300 basis points in terms of market share in Q1. Premium also had seen some growth there. So now what is your overall market share and what is the outlook there?
Yeah, so this is a positive story. We continue to grow overall market share. Based on our validated data in this quarter itself, we grew almost 97 basis points of market share, which is quite phenomenal because in the full first half, now market share gains are more than 100 basis points at an overall national basis. On premium, again, we continue to grow market share. We have almost touched now 20 market share and above in certain as per the data we have. So market share is absolutely not a problem right now. We continue to grow. But as I said, our key role as United Breweries is to grow the category. I'll be happy if the category grows faster and we can fight out the market share game later. But right now, it's a positive story on market share.
Right, positive in the market share, but the underlying is always to grow the category and then thereafter fight for market share. Wish you good luck for the remainder of this year and thereafter as well on your structural uptrend journey in the beer category for the nation. Thank you, Vivek. With that, let's give a quick note to our viewers. As you can see on the screen, there is a money control stock score, which is just above the line graph. This is a score which is assigned to each stock based on the money control multi-factor algorithm calculated by analyzing over 40 parameters, which include both current and historical financial statements, price charts, and technical indicators for each stock. Each of these individual parameters then considered for calculation of the 4 factors, which are then assigned a Q score, G score, V score, and T factor score. Remember, this is not a buy or a sell recommendation. It's any investor who has a view or is wanting to make an action is allowed to do the necessary diligence on their own through a certified registered professional or a financial advisor for their investment decisions.
Welcome back to Halftime Report on CNBC-TV18. Nifty, as of now, just flopping between the red and the green, but still holding on to 25,700 as of now. So let's keep an eye out on that level there. A lot of individual movers in today's trading session. And to take us through those buzzing stocks, let's go across to Vivek now. Vivek, good afternoon.
Well, good afternoon. Like you mentioned, quite a few stocks on the radar on the back of news flow, on the back of results, back of announcements that they've made to the exchanges. First on our list has to be Bank of Baroda. Extremely strong Q2, multiple upgrades coming in. Investec as well as Nomura have upgraded the stock and the target price. Have a look at Dredging Corporation. The company has announced a capex to go ahead and improve its own facilities, and along with that has signed multiple MOUs at the recently concluded Maritime Summit. The entire PSU bank rally, it took a bit of a halt last week, but look at them. All of them today are back in the green. SBI up over 1%, Union Bank, UCO Bank, Union Indian Bank doing very well in the session. Intellect Design Arena, stands out, especially in the mid-cap IT space. The company has said that they expect margin recovery to extend into S2 as well, almost 5% higher. And Schaeffler, the bearing space, after a while, has seen a very good set. That particular stock up almost 7%. On the other hand, quite a few laggards as well. Well, Network Technologies, it's been a decent Q2, but given the fact that the stock has rallied so much in just the last 3 to 4 months, it's taken a bit of a breather today, down almost 6.5%. Zensar Technologies, again in the mid-cap IT space, very muted set of results. So this particular stock continues to languish in trade. JK Cement, again, elevated expectations from this name, but it's been a bit of a miss, almost 5% lower for JK Cement. And no still, this particular company, again, it's been a very muted quarter. Margin contraction seen, that particular stock down almost 4% in the session today.
Okay, Vivek, thank you so much for taking through all those stocks in today's trading session. But the countdown to India's most prestigious business award has begun. The jury of the 21st India Business Leader Award met in Mumbai to pick the winners. They included the biggest names in corporate India. We caught up with Kumar Mangalam Birla, who said that he wants the group companies to be in the top 2 across industries. Listen in.
I think being in the top 1 or 2 in the industry that they are in, with return on equity, that's specifically each one's target. Largely, that's how we work.
Are you particularly chuffed about some of the forays that you've made, especially in the consumer space? With the GST cuts that have happened, that would boost consumption and the money that people have in their hands. Have you seen that on the ground?
Yeah, I think they had a very good Diwali. I think both paints and as well as retail, jewelry retail. It's our first time with such sort of hardcore consumer brands, and it's good to see them having taken off so well.
Right. You speak about your consumer brands, etc. The one thing that we have to learn from you, and what according to you would be the Birla playbook of entering and disrupting a category which has had a lot of incumbents. You've done that multiple times in the past, but now as well, with the consumer foray that you've made in the kind of categories that you've entered, including the likes of jewelry and paint, what according to you would be the Birla playbook?
I think the first is very thorough preparation and understanding clearly what it takes to win in the industry, what our levers to win would be, and then executing to precision almost. I think it's basically both of these. It's understanding what ticks for the customer. Consumer insights are very important to build a business model around that.
Right, that is Kumar Mangalam Birla indicating the Birla playbook for disruption in a category which has a fair amount of incumbents, saying that the consumer business has done far better so far than what they were expecting in this festive season. Take a short break, come back. Our focus on the F&O setup at midday. Stay with me.
Welcome back to Halftime Report on CNBC-TV18. Like I mentioned before as well, right? The Nifty is flip-flopping between the red and the green. Again, it's moved the green. 25,730.31. Around that is what the Nifty is trading at. Bank Nifty, though, is comfortably holding on to gains of 0.5%, more than 300 points up in the trading session right now. But what are we watching out for in the world of F&O? Let's go across to Mangalam, who is at the F&O desk to give us all those details. Mangalam, over to you.
Well, the Nifty is consolidating around that 25,750 mark. The reason why I say that is because, despite the Nifty Bank and the mid-cap index doing well, it's the IT index which is putting pressure on that. And every time the Nifty moves towards 25,750 and thereabout, we see the India VIX move higher. But now that the Nifty is cooled off from the highs as well, as has the India VIX. This morning, the India VIX was up around 5%, 5.5%. But now, once again, if the Nifty is in the green, the India VIX is at 4%. The Nifty, minute it moves into the red, we see the India VIX move around 3.5% as well. So, the Nifty move is fairly, congruent to the way the India VIX is moving. So to that extent, the range now is extremely crucial. 25,643, which is today's low, and 25,773 is the broad range the street is working with, at least for direction after the market has continued to consolidate. And that's where the option writers are fairly active as well. 25,700 put, I've seen a fair amount of writing, premium of almost 62 rupees, telling you that maybe there is support around 25,650, which again is today's low. But on the way up, there is some supply coming in. 25,750 call and the 25,800 call. Both of them come up for you on the screen. The 25,750 call has seen a premium erosion and has a premium of almost 35-40 odd rupees. And the 25,800 call has a premium of 50 rupees as well, telling you around 25,800 to 25,850, there would be some supply coming in. So the broad range you're looking at, 25,650 on the Nifty on the way down and 25,850 on the way up. The put call ratio, the Nifty bounced back from oversold levels on the put call ratio as well at 0.65. Now that has moved to a more respectable 0.74, still not out of the woods, telling you that we have some room on the upside all the way up to 25,850. But a lot of individual stocks, they are moving around. A lot of short covering on Godrej Consumer, Shriram Finance is the top Nifty gainer, Bank of Baroda as well. And some shorts added on names like Hitachi. So watch out for that one. Hitachi is down about 2.5% in an otherwise strong market for the broader markets. Has seen some short positions being initiated. So keep an eye out on that one.
Okay, Mangalam, thank you so much for that. Surely we'll be keeping an eye out on that. Hitachi Energy is expected to report their numbers as well. So let's watch out for that as well. But on that note, we're going to actually sip into a very short break. Up next, we'll connect with the management of Pine Labs as it opens for IPO on 7th of November. Welcome back to Halftime Report on CNBC-TV18. Now, shifting focus to the action in the primary market, Pine Labs' rupees 3,900 crore IPO will hit the market soon. My colleague Rima spoke to the management on the use of IPO proceeds, the growth strategy that is expected there, and more. Listen in.
See, in Q1, let's keep the one-off profits away. We still were about 5 crores negative at a PBT level. However, over the last 5 years, and when you look at the specifically over the last 3 years, we have been EBITDA positive consistently. In fact, in FY24, we were at about 160 crores of adjusted EBITDA. Going into FY25, we came in at almost about 355 crores. So we've doubled EBITDA on a year-on-year basis. And in the first quarter that we've obviously published those numbers in the RHP, in the first quarter, we've come in at about 120 crores plus in terms of adjusted EBITDA. So at an adjusted EBITDA level, we've always been good. Now let's look at the line items below the adjusted EBITDA line. There what we have is obviously the ESOPs cost. We've actually taken an industry first move where just recently before the IPO, the ESOPs that we have issued, we've actually issued it not at a deep discount level. Because we believe as you go public, you need to look at not just in terms of net revenues, contribution margins, EBITDA, but also need to have a deep focus on the PAT line. So I want to let everybody know that the trend that we have shown on the EBITDA front, we would love to repeat that at a PAT level also.
When do you turn profitable at the PAT level?
At a PAT level, as I said, in the first quarter, we have turned positive. And the trend in general where we were at a PAT level negative of about 350 crores. Last year, we went to about 140 crores. And now we are at positive. I don't think so the trend is going to reverse. We will want to continue that trend going forward. So Q1 was the first quarter that we are PAT positive. As you know, Q2 is very well done and over. We would love to continue the trend going forward.
Got it. So while India's digital payment volumes is growing leaps and bounds, the monetization is shrinking, especially with zero MDR on UPI. And now even the POS hardware is getting increasingly commoditized. How do you improve your profitability from here on?
That's a great question. But let me just first set the baseline in terms of what we do. In the RHP, what we have identified is we operate in two large business lines. One of the business lines is what we do on the issuing side, where we issue out prepaid cards, wallets, we hold money, all of those services. That's almost close to about 30% of our overall revenues. The remaining 70% is very well diversified between POS-based revenues, revenues that we earn on value-added services where we enable other financial institutions, other fintech to do specific offers, campaigns, installment payments on our terminals. That's another piece out there. And then the third piece to it is largely what we do in terms of online BBPS using the DPI, the digital payments infrastructure of the country. Today, the POS-based revenues in our business has now shrunk to less than 50% of this digital infrastructure
Which
business.
is 70%.
Which is only 70%.
So POS machines, leasing it, maintaining it, you would say is less than 50% of 70%, so
that
about a third of your revenues.
That is correct, right? So where we have it out there. So what we want to do is we want to continue to build the best technology when it comes to checkout. Let me give you one example. Yesterday I was out, in Parel in all of the malls, and you went to Zara. And there, if you see, the checkout has completely changed. You can throw goods into a box out there and you can just simply check out there. In many of these cases, there is a Pine Labs terminal. We see ourselves as a technology provider when it comes to technology. Technology does make revenues, and that's the way we've actually built our business. The other piece to it is went and bought a TV. Now that TV was bought on the installment payment services, where we bring thousands and thousands of consumers. We bring in about 30 credit institutions. We bring in about 300 brands to convert transactions to installment payments. We make money out there. And then finally, we are now processing huge number of volumes, almost billions of dollars on a monthly basis when it comes to bill payment transactions, online payments transaction. There again, we are able to make money.
So what will be sustainable margins for you? We've seen your margins improve from sub 10% in FY24 to nearly 20% in Q1. What is the sustainable rate you are gunning for?
See, one thing what we wanted to do is we wanted to demonstrate that there is an ability for us to expand our EBITDA while we continue to grow the business. Over the last 3 years, we've been safely 20% plus when it comes to revenue growth. But what we've also wanted to do is we wanted to show an EBITDA expansion in our business. We've shown an EBITDA expansion where EBITDA has gone from low single digits to now at 20% in Q1 of this year. We want to continue to showcase that this is a company which has been built on two pillars. One is consistent growth and also consistent improvement in EBITDA, obviously positive EBITDA. And that's what we've actually been able to do in Q1. But the way I look at it is this is just a starting point. It's a trend that we want to continue to work on.
So global peers that you compare yourself to, whether it's in Southeast Asia, what margins do they operate at?
So we have seen internationally there are companies in the payment space which are operated anywhere from 40 basis points, 40% of EBITDA to almost about 55% of EBITDA. But that's happening in global markets. One of the things I should point out is 15% of our revenues today now comes out of international markets.
Now you're raising about 2,080 crore, Amrish. This is lower than what you had earmarked earlier in terms of a fresh issue. Are you deferring some of your growth investments to next year? And with the growth capital that you do get, you were growing at 20% comfortably on it, in terms of a top line. What will the number scale up to with the increased growth capital?
I'll make two comments to start with. First is I have more than 1,000 crores of cash on our balance sheet today. That's point number one. Point number two is when we have reduced the OFS and the sale amount, fresh issuance, when we have reduced it, zero has been taken away from any growth-related activities. So growth-related activities, when it comes to international expansion, technology investment, we made no changes. Just as our financial position has improved, what we have actually done is we have reduced some of the debt repayment activities that we had identified.
And 20% plus revenue growth, does that continue or do you think you can do better now?
See, look, as SEBI does not allow me to talk about the future, I can only tell you about the past. In the past, over the last 3 years, we've grown at almost about 20%. That's something that we want to continue to demonstrate, that is continued growth in our revenue, in the top line, and the improvement on the EBITDA side, which, as I told you, we've also reached about 20% as far as the EBITDA number is concerned.
Now, competition in merchants payment space is, fierce, from Paytm to PhonePe to Razorpay. Now, PhonePe, for example, has also launched its own POS devices, and it is increasingly aggressively expanding into the offline merchants payments, which has been dominated by you. How do you protect your share and pricing power?
In the last 3 years, the volume, the GTV growth in our business has been more than 60%. The number of transactions on our platforms have compounded at more than 50%. The number of merchants which have come on board have compounded at 30% plus in those last 3-year period. I have no dearth of opportunity. The top 5 bank uses me. The top 3 e-commerce companies use us for our online payment services. We have the top 3 Q-commerce companies all using Pine Labs. So our revenue base is extremely broad-based. Growth is absolutely in place. Competition is not something which keeps me awake in the night.
Welcome back to Halftime Report on CNBC TV18. As of now, what we're seeing is that the realty pack continues to do well, and especially in the realty side, we're seeing a good up move coming in a lot of these real estate names. So let's keep an eye on that. Phoenix Limited, so they also reported their numbers. We have DLF that's managing to hold on to very strong gains, as well as Prestige Estate. That is something that we'll be keeping an eye out on. On the flip side, Nifty FMCG today, that's a bit of a drag that we're seeing. And Colgate Palmolive, Imami, ITC, they're the drags on the FMCG side. Though Godrej Consumers managing to hold on to good gains. Radico Khaitan, that's also managing to hold on to gains of more than 1% in today's trading session. So that's what we're keeping an eye out on. Sterling Wilson, Gravita India, Schaeffler India. These are some of the names that are also managing to hold on to gains, and this is in the broader end of the market. So that is what we'll be keeping an eye out on as well. But a lot that's happening in the world of commodities. And let's go across to Manisha to take us through an interesting chat that she's planned for us as well.
Vinny, thank you so much for that. And joining us on the segment right now is Mr. Praful Vitlani. He's chairman at All India Sugar Trade Association. Mr. Vitlani, hi, thank you so much for joining in. First of all, your sense on the sugar prices itself, because when you look at the international markets, it has been constantly declining. As far as the Indian sugar prices go, it has been more or less flat to negative. And there also has been conversation about how there is not so much sugar demand this season as well. The whole festival season has gone by and we haven't seen demand pick up. How have you read overall supply and demand scenario, especially for the Indian markets?
I would like to say in two ways. One is that season 2024-25 is a thumb rule. We usually have a 6 million ton closing stock. This year we are 2024-25, we will be having 4.5. So the price will increase and it is coming down. But as far as 2025-26 is concerned, which my office has done a poll on Saturday, based on to that, if in case government now do not accept the long back demand of the industry for increasing MSP for domestic sale, ethanol procurement price, though it is like becoming a habitual of asking from last 2-3 years to the government. But in case if government doesn't accept this demand, there will be a horror show in sugar trade. There will be excess carry forward in India and entire sugar sector will collapse. According to my office poll, we are having opening stock of 45 lakh ton of sugar. We are expecting, as per my poll, is 360 lakh ton of sucrose availability for 2025-26. Maybe it could be more, but not less than 360. It looks like as on today's. So that will be total availability of 405. 290 will be our consumption. So we are left with 115. Of that, 35 will go for the diversion for ethanol. There is nothing is left for excess than that. So we will be closing at around 8 million metric ton. 8 million metric ton, and this is, I'm telling you, without accessing the recovery and the yield, which we will come to know in December end or in January because of the season is delayed. And the numbers which are being predicted in the month of November, they are subject to error of 8% plus minus. But in January, it is have only 2-3%. The real picture will come in January. Before it get damaged, the government should immediately, even should not waste 1 or 2 days, allow 1 million ton export permission. We know that there is no parity, but at least psychology that will help. Secondly, the demand of 3-4 years of increasing MSP, if it is also not increased by 15th of November, the price will collapse like anything, because the sugar millers, we don't have the money power, and their sales above the release mechanism, that will become another distress selling in the market, and price will collapse. The ethanol procurement, our advocacy is to the point, and very clearly that last year corn was imported, and there was no saving for our forex earning. But then also they are being paid 71 rupees per liter, and the foundation, the 40,000 crores investor, they are being given 65-66 rupees. So it is injustice to the sugar sector. And if such things happen, it will be very much difficult for sugar industry, sugar trade, farmer, and I am saying for government also. There are 7 assembly elections, including this Bihar one. And if such way, if the sector is ignored, then it will be definitely going to affect even the government of India. So what I feel personally, 3 things, yes, immediately should be done. That is MSP for domestic ethanol procurement price hike from the tender which is done few days back. And of course, the export being allowed. If such things happen, it's fine. Either sugar sector is going to be a collapse one.
Big problems, especially when it comes to profitability within the sugar space. I also want to come to the demand part of it now, and the sugar demand in the country seems lower as compared to previous year. Would you say that that seems to be becoming a bit of an issue as well? I understand ethanol and export are one part of it, but the Indian demand itself during the festivals did not see a hike.
No, Manisha, that's a wrong advocacy to get some policy which we don't like. There are now in poll, there was no differential on 2 opinion. We were having 80 lakh ton of opening stock. We have produced 262. We have closing stock of 45. If this all 3, there are no difference, then where the 289 sugar is gone. We have 297 of dispatch, 8 lakh ton for export and 289 for domestic consumption. Okay. Domestic consumption has not gone down, and we are looking that domestic consumption may be around 290, 292 in 2025-26. There is nothing worry about the consumption as such.
All right. I'll move on to the export part of it. And you yourself said that 1 million ton of permission immediately perhaps would do well for the sentiment, even as there is no parity in the international markets. It's not just India that we're looking at. We're looking at higher production in Thailand and Brazil as well at this point in time. With where the prices are lowest in many, many years, trading around that 15 cents a pound right now. What is your sense from the global cues?
See, global, there is definitely a surplus of 4 million ton over there. What happens in India, we are asking that 1 million metric ton. This is from November to January. If the excess supply by the sugar mills dropping by 3-4 rupees more than the real actual price, at that time window will open for export also. So it will not collapse such a lower level that it is become an horror show. So why 1 million ton is required immediately to check these people, the person who are selling more than the given monthly
allotted quota.
Yeah, so that is the thing, and we are currently the sugar industry is at a higher price giving for sugarcane in world, highest price retail in sugar. That is because of the release mechanism, because of the MSP in the domestic market, because of the ethanol. These are the few fundamentals which cannot be ignored by the government.
Okay. Thank you so much, Mr. Praful, as well as Manisha, for joining us today, talking to us about everything that's happening in the sugar industry. Thank you so much for joining us. But Tata Consumers, Mangalam, that's reported its numbers as well. Margins a bit of a decline, but the stock has spiked up. If you could give us any hints or details in terms of...
These are great numbers coming in from Tata Consumer, no two ways about it. Why do I say that? Because one, there has been a beat on the revenue, there has been a beat on the absolute EBITDA, and as a result of which, the beat has carried all the way down to the bottom line as well. What is it that the street likes this time around? If you look at their India business, the revenue has grown by about 18%, but the EBIT in the India business has grown by 48%. That means a margin improvement of almost 250 basis points. Why has that happened? Remember, over the last 3-4 quarters, the margins in their tea business in particular were under pressure because of the high inflation that we were seeing in tea prices. The management had said that once the tea flush season starts, then maybe there could be increased supply, and as a result of which lower tea prices, which would impact their margins positively. We saw that in the likes of Hindustan Unilever as well, and now that seems to be the case playing out for Tata Consumer. Lower tea prices would mean better margins for them. They might be sitting on some high tea inventory, but from here on, the business outlook would perhaps be that the tea margins would only improve and go beyond what the company has been reporting over the last 3 to 4 quarters and go to the range in which the company has been guiding in terms of double-digit EBITDA growth. So double-digit revenue growth with an EBITDA growth faster than that is what the company has been guiding for X of tea inflation. And now that tea business is looking at lower prices, we can expect EBITDA to increase, and that's exactly what has happened, and that's what the street is now celebrating as well. A 1% up move on the stock, a spike from the lows, but remember, from 52-week lows itself, the stock has seen a fair amount of a rally because a large part of the street was anticipating this outperformance to come by. So 10.5% growth. Though we'll look at the presentation now to get in more details on how the Narishco business has performed, because my sense is that would have been impacted by higher than expected monsoons and maybe some competition as well, and how the other parts of their business have performed. But for now, what we know is that reduction in the prices of tea has impacted their margins positively. We take a short break, come back, get you more on the markets and also some of these earnings which are likely to be reported today, Titan and Ambuja Cement. Welcome back. Let's talk about Titan. The stock slightly under pressure in today's trading session ahead of numbers, but more importantly, we got to look at, what the company is likely to do. From the lows, we've seen a recovery because their second quarter update is what we have already. On that base, Titan has seen a near 20% growth in their jewelry business, and that's exactly what the street is penciling in this time around as well. Domestic jewelry business growing over 19%, surging gold prices drove substantial ticket size increases, and the second quarter had a high base, but the early onset of the festive season has offset that high base. So what you're expecting is a near 14% jump in overall revenue. Remember, this is because of some of the bullion sales, so it adjusts for that. It does not correspond directly to the second quarter update. EBITDA is likely to see a 47% jump. Why? Because same time last year, the margins were at a multi-quarter low because of the loss on account of the customs duty. So 11%, 10 to 11% is what the company has guided for in their jewelry business. So 11% is what the street is expecting. Net profit on the back of that favorable base increases by 49% as well. Studded jewelry grew in mid-teens, outpacing plain gold jewelry growth, and gold coins continued to do well as well. Watches grew 12%. That's what we know already. Eye care grew 9%. Carrick Lane grew 30%. International business on a soft base grew 86%. And this is the growth driver for the company going forward as well. Even emerging businesses, a smaller part of their business, 48% growth in fragrances. Women's bag grew about 90%. So we are expecting a decent set coming in from Titan, and the stock price tells you that. But while we were talking about Titan, there was, a flash that came at the bottom of your screen on account of delivery as well. They have given a festive season update this time around, and obviously the festive season for players like delivery would be extremely strong given the sort of sales that we've seen in all the e-commerce platform. And for delivery in particular, the addition of e-com express would add further to their volumes, which were otherwise under pressure from Meesho moving to their own delivery platform. So all these factors doing well for them, and delivery obviously reports its numbers on the 5th of November, so we'll keep an eye out on that as well. Speaking about more numbers, Nigel joins in to tell us what Ambuja Cements is likely to do. Nigel.
Well, that's right. Ambuja Cements, actually the numbers look good, but Mangalam, as we know, for Ambuja Cements, we already have ACC, we already have Sanghi Industries, and we have Orient Cement as well. So, majority of the numbers, a large portion of the numbers are known. Though we look at the number on a consolidated basis because all sell-side analysts have put out estimates on a consolidated basis itself. So on the top line, there'll be a good growth of closer on 22%. The EBITDA number will jump up on a very low base, so it'll jump up more than 30% or thereabouts. And profitability will be up as well. Let's run you through a few factors at play. Well, volumes will be very, very good. It'll be more than mid-teens. It could be high teens as well because of the consolidation, right? There were quite a couple of assets, and those assets are ramping up. So that's why top line will look good. Besides that, even realizations on a year-on-year basis will be a little bit higher, so that's what will support the top line. However, on a like-to-like basis, actually, they will grow in line with the industry. Mid-single digits or maybe, low to mid-single digits is what they will grow. But the reason that the volumes will look phenomenal is because of, the inorganic growth that they've done. Moving to the EBITDA front, but that'll get supported because they've been focusing on the cost side. So that'll hold them in good stead. And also operating leverage will play out. Besides that, the PAT number, if you look at it, the growth is not as much as the EBITDA number because depreciation is likely to spike up on that front. For Ambuja Cements, we'll keep an eye out on the management commentary because they will be commenting on Adani Cement on the whole since it owns, ACC, Sanghi Industries as well as Orient Cement. So we'll keep an eye out on commentary. I think that'll be the crucial takeaway since we already have parts of the puzzle. Back to you.
Okay, thank you so much for that, Nigel. Surely we'll be keeping an eye out on those numbers over there. But with that, we're absolutely out of time on this edition of Halftime Report. Nifty at 25,750. Don't go anywhere. Business Lunch is up next to take you through all those other facts.